What does a good investment property even look like? In this video, we'll be going through example of 8 investment properties, including the pictures, the numbers, the details, the locations, so you can get an idea of what it actually means to succeed in property investing. All right. If that's what you're interested in, seeing success so you can emulate it as an investor, regardless of the cycle, regardless of what's going on in the macroeconomic environment, then carry on watching. My name is PK and I help people build passive income through the Property Investment Accelerator using data without needing to drop $15,000 on a buyer's agent every single time. And this channel exists to help you understand property investing, understand the economy, and understand financial happiness. If you're interested, carry on watching. If you're brand new, smash the subscribe button. Let's go. We've bought over 30 properties in the last month. I'll go through 8 of them, and you can see that this is not a selected few best properties, the cream of the crop. We'll be going through a random assortment. And, every time I do this hugely on demand, popular video, it's one of my favorite videos to do every single month. We've been doing it for ages. I always get comments in the YouTube, who's this random guy? How do we know we can verify? How do we know where he's not making this stuff up? Have his clients even bought these? Does he even have clients? Well, I just want to share that we have 20,000 people in our Facebook group. Every single property, or most of them at least, they have the client tagged. And so if you're not sure whether these are real or not, you can use the Google reverse image software, see where they are. Everyone does it anyway, I might as well just say it. Or you can DM my clients, everything is verifiable. And these are real deals by real property investors buying properties for themselves without needing a buyer's agent. This is the first one. 2 properties in 2 months, 6% yield and a little known Perth suburb growing monthly. First thing to understand is that you do not, or you should not buy in a suburb that is booming. It's very hard to buy there. Try to find something that is about to boom, something that most people don't know about. That's exactly what Paul's done in this one. $60,000 capital required. So even though we've gone through a boom, property prices have gone up, you can still buy properties where you only need $60,000 of deposit and transaction costs. He was rejected by the banks. Once again, the lesson here, and I'm going to go through tips and tricks, as I go through this video, how to buy properties, where to buy properties. He was rejected by banks. He just changed mortgage brokers, and then all of a sudden he was able to buy 2 properties. So I know a lot of you guys have issues getting a loan. Pivot. Try to find someone who can give you a loan. He saved $30,000 in buyer's agent fees because he's done it himself through the power of education. Okay, Paul Martin, $351,000 purchase price, rent per week $400. It pays for itself. 746 square meters, brick. And all of that stuff is just useless unless the data is good, both short-term and long-term data. So all of the data factors are lining up super well, and therefore it's already growing. Okay, vacancy rate is really, really nice at 0.26%. We know rents will rise. No buyer's agent needed. He bought this in Perth from Brisbane, and didn't catch a single flight. Doesn't mean he relied on the photos online. No, he did his due diligence, but he had the right team do it for free for him. That is the power of networking, education, and, just a mentorship program that gives you everything in one package. To toot my own horn, he didn't catch any flights, had all the due diligence done. He's rinsing and repeating it. This is his second property, right? And here it is. So you can see here by looking at this property that, that it's super, super nice. Brick, really nice front yard, indoors, it's polished floorboards. You can't really go wrong. Let's go to the next one. So who said you couldn't invest over 50? Once again, this is Paul Martin. Take a bow, 6.7% yield plus capital growth. You don't need to make those trade-offs, guys. You don't need to make off trade-offs between growth and cash flow. If you regress suburbs that have performed well over the last 30 years, there's no meaningful regression, no meaningful relationship, no meaningful R squared for those statisticians out there between cash flow or negatively cash flow properties and growth. You can get both. You can get high yield, high growth. Once again, only $60,000 required. And this one was a bit cheaper actually than Queensland, $302,000 purchase price, rent $385. It pays for itself, 647 square meters, brick. Check out this one, another beauty. You know, this one is renovated on the inside, huge backyard, beautiful lawn. Once again, brick, you can't go wrong. Here's the next one, bought for $300,000, rents for $400 a week. That's 6.8% yield. You know, when you get yields like this and interest rates go up, and obviously they'll come down in 12 months or so as time, you're banking so much extra cash flow, whether it's now or in the future. That is really what allows you to ride through cycles of unemployment, up, down, interest rates up, down, oil prices up, down. You know, this is really interest rate proof for both cash flow and growth. It is positive cash flow. New flooring, new kitchen, new bathroom, nothing to really do about it. Walking distance to shopping centers. Jeremy Francis. Once again, I tag all my clients in these videos, in these properties, sorry. So, you know, you can DM them. You can verify whether I'm just making stuff up. But how can you make this stuff up? Every 2 days for years, I've been posting. We bought more than 30 properties just in the last month, more than 270 properties in the last financial year. Be part of this community. Join the Facebook group, okay? $305,000 purchase price, rent $400, positive cash flow, negotiated after billing and pest. Yes, you can do that, even in the conditional period. Good size block, great data, low vacancy rate. He was from Sydney, he bought this in Queensland, all the due diligence done. And check it out. I mean, once again, nice property, right? I mean, you can't really go wrong with something like this. Next one, 2 properties in 2 months. Hemmel's second property is 6% high yield, high growth in Queensland. Once again, it's interest rate proof. This particular pocket of Queensland, you know, even if interest rates go up another percent, another 2%, people don't need to sell. It's so affordable. Affordability is so important. Rents are likely to rise $2,000 to $5,000 in the next 12 months. So, you know, if you're struggling to get a pay rise, you shouldn't be unemployment so low, but this is like a pay rise every single year. And if you can accumulate a portfolio, you can see how you're building wealth, right? It has good tax benefits as well. We don't buy just for tax benefits, but they're a nice side effect. He's bought 2 properties, saved $30,000 in buyer's agent fees. This one was $417,000, rents for $480, positive cash flow, negotiated, good block size, 2006 built, so good depreciation on it, great data, low vacancy rates, bought in Queensland from Sydney. And you can see that. I mean, you just hold this sort of thing. You just hold this sort of thing for a decent, I would say 10, 15 years, and it pays for your retirement. That's the beauty. Stick with me, guys. Hit the subscribe button. You're not getting content like this anywhere where someone is actually demonstrating you hundreds and hundreds of deals on a monthly basis so you can get tips and tricks. Okay, and here's the next one. Andrew, fantastic guy, tag all my clients, 7% yield, rock solid Queensland property. So when you get 7% yield, and once again, these aren't in whoop whoop, they're not in like super rural areas. When you get these properties, you don't care about what interest rates are doing. You don't care about what these banks are forecasting. You don't care about what these economists are saying. You know you've made the right decision, right? Once again, there's a rental crisis in this area. Rents are going to go up by almost $5,000 in the next 12 months. It's close to a golf course, Catholic school, all good things to have over and on top of the data. Saved the $15,000 buyer's agent fee, purchase price $330, valuation slightly under market value, right? Like you got this for $330, it's valued at $342, $445 we can rent, positive cash flow, negotiated $9,000, which you might scoff at, but that's a lot of money relative to $330,000. Good data, good vacancy rate. He lived in Sydney, bought in Queensland, didn't catch a single flight, did all the due diligence, didn't just go sight unseen. You can see this. I mean, check it out. I mean, it's a nice cottage, beautiful backyard, you know, read a book there, have kids playing around, nice bathroom, which I decided to include the picture of. You know, once again, brick, can't go wrong. Next one, beautiful Queensland property with huge land and bonus tax breaks, 4-bedroom modern house to hold for 20 years or more, good yield, 0 vacancy rate. Like that's not a typo. There is literally in the suburb no properties for rent. As soon as one goes for rent, the same day it's plucked by one of 100 applications from renters. Big infrastructure spending going on here. And so fantastic work by Shankar. That's all that can be said. I saved the $15,000 buyer's agent fee. A little bit higher or more expensive property, and you don't need to buy $500,000 properties, but in his strategy, he could. $550, rents really well, 0 vacancy rate, huge block size. He can do something with this in the future, subdivide or what have you, 803 square meters. All right, and check it out. I mean, just kind of pause, right? I mean, how many of you would actually like to live in this property? Many people say, oh, I want to buy a property that I would like to live in. statistically, from a data perspective, that's emotional property investing, but I'm just making the point, like, how beautiful is this? Next property, 3 properties in 3 states in under 12 months. This is from Ardash, $400,000 suburb, good yield. While all of his friends are buying $1 million apartments in Parramatta and other places in Sydney, he's making right decisions, buying interstate, affordable properties, high yielding, where his borrowing capacity isn't affected as much. $386,000. He just needed $70,000 to do this deal. So if you have $70,000, you can do this sort of thing, and you should be aiming for rents like this, 400 plus for a 300 or 350 or $400,000 type property. Double brick home, good land. Never buy a property with land like too low in the sort of average typical suburb. Always try to get 500, 600, 700, something like that. Bought in South Australia from Sydney. So you can see which states we're buying in, right? We've already gone through WA, Queensland, and South Australia. And once again, brick, you can't go wrong with this. He literally had so many tenants just vying for a place to live here. $7,800 per year passive income increase in 10 months. That's how much in the right suburb rents are increasing, and rents are able to be increased because tenants can afford it. That's the most important thing. And if that can happen, you eclipse these interest rate rises. Okay, and you only needed $80,000. Sorry, he got $80,000 capital growth in 10 months. This is Ardash again, saved again $50,000 in buyer's agent fees. He needed $65,000 to buy this $346,000 property, rents for $450, blah, 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 blah. Once again, look at that. Looks beautiful. Nice foliage at the front. Beautiful backyard. I mean, every tenant would be salivating over this. 2 more to go. Stick with me. Strong, low-risk Perth suburb and affordable. So what I want to say here, Perth, of all the capital cities, is most at the bottom of its growth cycle. I remember there was a commentator recently who said that even though interest rates are rising, Perth will be long and strong in its capital growth in this cycle. That's why, or that's one of the reasons, the same data that we're looking at where we're investing heavily in Perth at the moment compared to the eastern seaboard. Okay, this is from Hannah, fantastic work by Hannah. She's tagged in here. She bought this within 6 weeks of starting the course. If you're thinking that property investing takes time or it's a part-time job, it's really not. You can do this so quickly. I know so many of you are just wasting 4 or 5 hours every single day on realestate.com. That is the wrong way to go about things. All you need is 4 to 5 hours a week, and you can buy this type of property within just a month or two. Okay, $430,000 purchase price. She needed $80,000 to get the deal done. $450 in rent. Everything else is perfect. 1995 build, so good depreciation tax benefits. 678 square meters. Bought this in Queensland from Sydney without catching a single flight. Did this, right? I mean, she was a first-time buyer. She did this. Didn't need a buyer's agent. That is the power of education. And last one, and I'm not going to say everyone can get this. I saved this one for last. 8.9% yield in a capital city. Okay, just pause and understand the gravitas or the gravity of what that means. That means you're getting better than commercial property yields without the commercial property risk of vacancy. Huge positive cash flow. Interest rates go up to 7%, 8%, 9%. Doesn't matter when you get yields like this. And that doesn't mean this isn't whoop-whoop. This is a capital city, my friends. Completely interest rate proof, $10,000 positive cash flow, daycare, council approved, an amazing tenant. And, this was for $411,000, $70,000 to buy it, rent $700 a week. There's no gotcha in this. Like, this is just a really amazing deal. 2001 build, so good depreciation benefits. And check it out. I mean, many of us would love to live in this sort of place. It's not a crappy place in whoop whoop where you're just getting this, weird tenant. It's just a sustainable passive income. And that is what I want to leave you with. I want you to understand from what I've shared with you what is possible. Okay? I don't care how you get it. You get education from my YouTube, from all this stuff. Do it yourself if you can. But if you can't, then do something else, pivot, all right? Because the hard work now will lead you an easy life. If you make easy decisions now, that is going to lead to a hard life in the future. I'm trying to inspire you, I'm trying to educate you, and I'm trying to create some discipline in all of us so that we can get these results, because they're there. It's like those apples are there in the tree. You just need to be able to get like a little stool and climb on the stool and pluck the apples. Too many people are ignoring those apples and saying, I can't reach them. I don't even know where the tree is. I don't even know what a good apple looks like. So hopefully this video illuminated what good apples look like, so you know next time when you're looking for properties exactly how to pluck them. I'm grateful to you, my community. Give this video a thumbs up. Give it a subscribe if you're new to the channel. And always remember, before you invest in anything, invest in yourself. The 6 inches between your 2 ears are the most valuable real estate you will ever own. Knowledge is power. To level up, I'll leave links below to my podcast on Spotify, Apple Podcasts, and Google Podcasts in the comments below, and also to the Facebook group that you just saw before. More than 20,000 people, amazing investors, many of them much more educated than I. Get a part of it. Be a part of it. Grow your tree of financial happiness, and so in 10 years time, 20 years time, you can pluck those fruits and relax. All right, my name's PK. Catch you later, guys. Bye.